Um, I did want to review what we went over last week. And if you didn't happen to catch it, everything's uploaded to my YouTube channel. So you can find my YouTube channel, Abby Vick, and it'll have all these videos uploaded. This is week 3 of 8. So this will be uploaded later today. So why are we here? Why are we having a small business summit? Why are we all taking our time to do this? And it's really because after working with small business owners over the last couple months and years, we realized small business owners have everything on your shoulders, right? Especially if you're a solopreneur. And I own 2 businesses myself. So you're doing the marketing, the sales, all the ideas are coming from you, all the operations are coming from you. It's a lot to manage. And what I realized speaking with small business owners is that there are a lot of benefits to having your own business or even being a 1099 contractor that you might not be taking advantage of. And it's hard to know who to trust in that process because there's so many people out there with different programs and different sales. So really it's our job during the summit to bring experts to your door. So every week we're going to bring new experts, industry experts to talk to you about different topics. And that's where we're really creating this sphere of influence. So let's say you're right in the center, right? And who do I really want on my team to make my business grow, to make sure I'm protecting my family and I'm really growing my revenue? And so these are all the experts we're going to be bringing over the next 8 weeks. So attorney, financial planner, business consultant, banker, marketer, personal insurance, financial coach, all these different people are going to be bringing resources to you and specifically providing practical tools on how to help you take your business to the next level and see what protection or what growth maybe you might be missing out on. So I'm your host today. My name is Abby Vick, and I am the founder and the CEO of Paradigm Money Management. So I am a financial advisor, a fiduciary, if you're familiar with the term. Most of my clients are small business owners, and they're service-based. They opened up their business because they want to help somebody. They have a mission. They saw a gap in society and they want to help fulfill it, right? Most of my clients are in the Gen X or millennial generation. So they're younger, they're still in the wealth building stage. And the business, of course, is a large part of that. And then finally, a lot of my clients are women business owners, and women have been opening the most businesses over the last couple of years, and women of color in the last 2 years have opened even more. So that's the whole idea of what Paradigm was created for, helping those specific clients. So the title of the webinar today is Buy That Latte. And in the financial services industry, we have all these discussions and different advisors and different service professionals writing articles about how to help you with your finances. So I'm sure you have read an article about not buying coffee and making you feel bad about buying your latte in the morning. So here's one I thought we would look at together. And this is from Susie Orman, right? I think we all are familiar with Susie Orman. No hate against her at all. She's trying to make a difference in the world. I get that. But I have to say, I disagree with this article, right? So she says, if you waste money on coffee, it's like peeing $1 million down the drain. That's a pretty extreme example that she's trying to portray. And what she's saying is, if you're consistently have a habit, which she would consider something extraneous, something bougie, maybe if you use that word, that you are throwing money down the toilet, down the drain. And I just, again, respect to my sister who's in the financial service industry, but I have to disagree with her because spending money on these smaller things, which I would call your variable expenses. So we're looking at like a budget sheet that I have. If you want any help with budgeting, I'd be very happy to send you my budgeting sheet. This is just a little excerpt from that we went over last week. And really, she's focusing down here on these variable expenses. So these are our day-to-day expenses, buying clothes, going out to eat, buying coffee, right? And for some reason, buying coffee really makes some financial people upset. I love to buy myself a coffee. I'm not going to lie to you here today. But these daily spending habits, some people have slightly better ones. Some people have slightly worse ones. Honestly, I don't really want to talk about that. Because if you are spending a lot of money in the fixed area here at the top, where you have this contractual spending, you've made a contract between yourself and another company, and you said you're going to pay this bill on a monthly basis or a yearly basis, those are going to have much more impact on your monthly bills than just your daily coffees, right? So let's focus first on the things that have the greater impact, and let's make those kind of adjustments by using industry experts like my two awesome friends here today. And let's talk about how to get those expenses really in gear and make sure that you're spending the money the way that you want to in this fixed area first, before we even make you feel guilty about buying a coffee or buying a new pair of shoes. I don't really want to talk about the new pair of shoes or the coffee. Let's focus first on those fixed expenses. So the first topic we're going to go over today is banking. So Ryan's here to talk about banking and accessing all the benefits of working with a personal banker. So how can that really make a difference for you? There's so many options for doing online stuff, not even talking to a human about what your options are. So Ryan's going to help us understand that better. The second area we're going to talk about today is personal insurance. So how do you get the right coverage, and how do you still keep your money, right? Because we all know that there's a lot of different insurance coverages out there, a lot of different insurance companies that promote different products. But we don't have an endless amount of money to buy every insurance option that might be available. So how can we work with a smart and partner who can help us figure out what the right coverage is for us? So Sasha's going to come and talk to us about that. The other thing I want to mention before I do Ryan's introduction is that if you have any questions during this time, feel free to put them in the Q&A. There's a box below, or you can even put them in the chat if you'd like. I'm going to keep track of the questions throughout, and then we'll be able to address those at the end. So I'm going to stop sharing for just a moment so I can pull up my intro for Ryan. So Ryan has 9+ years of combined banking experience. Currently, he's at the National Bank of Arizona. But Ryan's going to be talking to us today from his personal experience being in the banking industry and also working in the auto sales and doing fundraising for nonprofits. He has a lot of experience in finance in general. And so we're so thankful to have Ryan on here today to introduce us to the banking industry in general. So let me pull this back up. Excuse me for my slow screen trading here. Okay, so Ryan, welcome, and thank you so much for coming to talk to us today. We're really excited to have you here. Ryan's a really good friend, getting to know him more and realizing myself and knowing my customers could really benefit from his partnership. So let's just start off today with why would someone consider a small bank versus a big bank? It seems big banks have those big names, but what else are they providing?
Thank you, Abby. I did want to mention that there are good things about big banks and good things about small banks, but there's also bad things about each, and I'll focus on the pros and the cons. First, I'll start with the good things about big banks, but keep in mind some of the smaller banks are beginning to catch up and add many of the features that these big banks have currently. So the big banks are losing a little ground to the smaller banks. Big banks such as Chase, Wells Fargo, Citibank, Bank of America, that's who I'm talking about. Typically, one of the good things is they have thousands of ATMs and tens of thousands of ATMs and thousands of branches. So that makes it very convenient, especially if you're traveling, especially globally, you can access your bank pretty easily. The big banks also have a deep menu of financial services. They have their own brokerage services usually, many investor features. This is attractive to high net worth individuals who want to house all of their assets in one place. Big banks also have access to the most up-to-date technology because they have the resources for that, such as remote check deposits on your phone, online banking, and more advanced ATM services right at the ATM. Some of the not so attractive features or the cons of the big banks would be they usually have higher fees than smaller banks. Even free checking is becoming a thing of the past for big banks. Wherever they can charge a fee, they will. Uh, Another downfall of the big banks is they're harder to navigate because of their size. They have a lot of reporting levels. They have much more turnover. So this makes it difficult to build a true relationship with a banker and difficult to negotiate fees and even loan rates. It's more cookie cutter at big banks because of the volume that they do. Also, it's very difficult if you've experienced big banks to get a real person at your local branch on the phone. So those are some of the pros and cons of big banks. Smaller banks, such as I would consider National Bank of Arizona, where I work, a small to medium bank, like a community bank. We were focused more in like one state. So National Bank of Arizona is under, just Arizona communities. We're under a larger umbrella of Zion's Bank, which is pretty much Utah, California, Nevada, New Mexico. But smaller banks like National Bank of Arizona, the biggest pro is the personal service. We're more relationship based. When you come into National Bank of Arizona, the tellers, myself as a banker, the branch manager, we all greet you by your name. We usually know your name before you dig your ID out of your wallet. So another thing, it's much easier to reach a real person at your local branch over the phone when you're calling a smaller bank. Typically, there's less or at least lower fees with a smaller bank. And because of the more personalized approach, their products follow suit. For example, here at National Bank of Arizona, there's many different types of checking accounts that a customer can choose from based on what their normal habits of banking are. So we can fit a product that fits your spending habits and whatever will really meet your financial goals. Smaller banks also understand the local community more and how people in that community handle their finances, and they can tailor products to that demographic. Some of the downfalls of smaller banks, one of them, of course, is the lack of a large ATM network. However, with smaller banks beginning to get on board with the online banking and the mobile banking, that's helping to overcome that obstacle. So I guess when it comes down to it, it's what's important to you. Is it convenience or quality with a personal touch? That's the pros and cons between big banks and small banks.
Yeah, great. And I think sometimes you might not know what you're missing with a small bank because we're so used to being with the larger institutions. And so even taking time just to talk to somebody about the different types of checking accounts, for example, when you're putting together a family budget that's efficient and effective for you, that might make a world of difference.
Absolutely.
Right. So what are some extra benefits of working with a personal banker at a small bank? If you can expand a little more.
Well, you get to see my face. Now, as a personal banker, my goal is to understand how the customer uses their money. That's the nuts and bolts of it. I sit down with all of our customers and I have a conversation to establish a profile so we can make your relationship as strong as it can be and that everything is working the way you expect it to be. Having a personal banker on your side can help you identify a possible better product than what you had in the past that might have less fees or yields a better interest rate or just that has better features to make your life easier.
Great. All right. So again, we're moving all forward in technology. We're all doing much more online. So really online versus the local bank. I mean, what's the biggest difference there?
The biggest difference is online banks are one-dimensional. An online bank cannot have two-way dialogue to be sure that the customer is getting the best product for their needs. Of course, it may be more convenient to set up online banking, but taking a little time with a real person like me when it comes to your money, it just makes sense.
Yeah.
And sense, no pun intended.
Or intended, for sure. All right, so let's get a little bit more specific about some of the offerings that your bank, in particular, the things that you do in and out every day. So I know home equity is a large part of the business that you're currently in, but what's really the difference between a home equity line of credit and a cash out refi?
There's actually differences and many similarities between the two. Determining which type is best for you really depends on a few things. How much equity do you have in your home? How much do you want to borrow? When you plan to repay the money? And whether you want a fixed or flexible term, and what rate you currently have on your existing mortgage. So I'll start out with a home equity line of credit. It's secured by your home, and most home equity products are at an adjustable rate. It's based on what margin you're approved at plus prime. So as prime adjusts, then your rate would adjust. Typically, the draw period is over 10 years. And during that time, your minimum payments are interest only. You can pay more, and that's, of course, preferred to manage your finances the best way. And it's usually a second lien position on the home unless your first mortgage is completely paid off. After the draw period ends, the outstanding balance at that time must be repaid or amortized over a specific term, typically 15 to 20 years. And it's still variable with the adjustment in prime. The fixed part of it is the margin that you're approved at. So the amount you can borrow on a home equity loan is typically, right now during this whole pandemic, it's been a little more restrictive. Typically, the highest we're going right now is 80% of your combined loan to value, as long as your debt to income ratio is less than 50%. And if anyone's interested, I can go over how that's all calculated further with you personally. A home equity line, it's a good way to borrow a small sum for a short term. It's good to have in the event of an emergency because it can just sit there. And if you don't use it, it's at least at National Bank of Arizona, we don't charge any upfront fees to open a home equity line. We don't charge a monthly or annual fee on a home equity line. So if you just wanted to have a line of credit sitting there for 10 years, you can, and it's there when you need it. And then I'll go over that in more detail because there's other ways. If you do access a large sum of money up front, you can get it at a fixed term and fixed rate by putting that under a sub loan of the home equity loan. But that's getting more into the weeds, and I can save that for when someone is wanting to talk more about it. Mm-hmm. So as a personal banker, those are the majority of loans that I set up for my customers. On the other hand, on a cash out refi, that's handled in our mortgage department, and it's handled by a mortgage loan officer because the cash out refi is an entirely new first mortgage with cash back to the customer when the loan closes. But just like a home equity line, be sure to take out exactly what you want to use when you're drawing money. So that's where it gets a little more restrictive with a cash out refi. The money you draw, you're paying on it right away. On a home equity line, you can have the money available there for you, but as long as you don't use it, you're not paying anything for it. So that's the big difference between the two. Cash out refis are usually at a slightly lower rate because it's at a fixed rate, and it's easier for the bank to understand how the customer is going to use it. There's a little more risk on a home equity line, so the rate's a little higher. It just really comes down to how everything calculates on what your intentions are when you're deciding which one works better for you, the refi or the home equity line of product. And that's where I come in and I can sit down and figure those calculations out for you. The bottom line is taking out any type of loan against your home is a big decision. The home equity line kind of works like a credit card, allowing you to pull funds when needed and pay them back when the draw period ends. And home equity lines have that variable rate, like I mentioned, but there are the options to lock it in. Cash out refi replaces your current mortgage, usually extends the mortgage terms, but it may be the right choice for homeowners who need cash and also want to lower their rate at the same time.
Yeah, I think these are both fantastic options, and there's not one that's clear and straightforward as being a better option than another. And Ryan's great at kind of helping with those details and those questions. But like I talked about last week, a mortgage might not be your first priority to pay off before you make other decisions, right? Especially with the rates as they are now. Going for a refi to get that interest rate down, or maybe even adding a HELOC. I see a lot of clients come in and maybe they don't have enough money to invest or develop their business further, or they don't have enough money in their retirement fund, or they don't even have emergency savings, but they have paid down their mortgage. And so having the equity in their home is very valuable. And these are some solutions to bring out some of that cash so that you can diversify all your assets. So yeah, these are really, really good
options. In addition to that, I forgot to mention, during this pandemic, I've had many people say, oh, I wish I would have had a home equity line when this all started, because they would have just had those emergency funds available.
Totally. Yeah. It's a great way to do that. So where can we start to find the best rates?
Well, and that's a good question. That's probably the best question that you've asked so far, because rates are something that definitely can be shopped for, and it really depends on the product. So if you're looking at savings and CDs, right now the market is horrible for savings and CDs. It's pretty embarrassing, actually. However, there is a niche in the market that's offering a little better rate than any brick and mortar bank, and that's actually online banking. So if you're looking to just have a simple CD or money market savings account, that's where you would look for maybe a point or two better is through an online bank. I know it's usually desired to have all of your finances in one place, but if you do have the time and the patience to split things up, you can and you can still manage it properly. It can be to your advantage to put your money where the rates are best. The other niche that is best for auto loan rates, and this has been a fact for many years, it's credit unions. But beware of their fees. Credit unions typically charge fees. Smaller banks are decent as well for rates on auto loans, but not typically as low as credit unions, but less fees. So you got to weigh your odds there. And then the larger banks typically do have higher rates for auto loans than the smaller banks and credit unions. As far as home equity loan rates, they're very good at banks like mine, small to medium-sized banks. One of the greatest advantages of National Bank of Arizona compared to a lot of other banks is, I mentioned it already, we have no closing costs on our home equity line of credit, no monthly or annual fees. There are banks out there that do charge closing costs or regular fees on those products. So just be careful of that if you do decide to go with a home equity product. So those are a few products that I know where to go best for the best rates, and I can help explore that with my customers. We're not always the lowest. I'm never going to say that we are, but if you want to house all of your finances under one roof, I think when you look at the mix of it, small banks are the way to go.
All right, so there's, debt gets a bad rap. I explained last week that I'm a pretty conservative person when it comes to debt. I don't love taking on new debt, but there are some benefits of having a credit card, right? Especially as a small business owner. So can you explain that?
Well, I would explain it in a way that credit cards are a necessary evil to help establish a credit history. Creditors want to see a good smorgasbord of cards, loans, utilities, etc., on a person's individual and business credit report. Credit cards, here's one thing that a lot of people don't realize. They're a good way to track and manage how your money is spent, both personally or for business. Many credit card companies and banks can offer you an annual report to so that you can look at how your budgeting went for the year.
Yeah, absolutely. So how do you know when you have a good one?
I always say shop around. If there's annual fees, keep shopping. There's no reason you should pay extra fees for using the card, especially when they're gaining interest if you revolve a balance. But also play the 0% balance transfer game. I know here at our bank, we do have an option of a zero balance transfer for 12 months on our cards. But after that 12 months, if you haven't paid your balance off, move it to another bank that has a 0% offer until you have your debt resolved. I know it's sometimes difficult to manage, but there's usually some offer out there. Rates on revolving balances on credit cards are typically 12 to 15%. So be prepared to pay that percentage if you're going to revolve balances and not pay it off month to month, unless you're under some type of promotional period.
Mm-hmm. Yeah, good point. I mean, starting to establish your business, when you open a business account and they offer you a credit card, you really should say yes to that, even if you don't intend to use the debt and build up your debt per se. But filtering some of those expenses through your credit card and establishing that positive history as a business entity under your tax ID number of your business, that's going to be really valuable to establish you down the road. Absolutely. All right, so here's the big one, right? How are we going to avoid these bank fees that are happening?
Yeah, this is important. When you open any type of account, always ask the banker to show you how to avoid any fees. One thing I do when I print out the whole packet of disclosures when I open an account for a customer, I pull out the sheets that have the fee structure and put that right on top and get a highlighter so that they know exactly what they're getting. And that also is where I have the discussion with the client to make sure that the product is going to work best for them. And I don't hide anything. I always say, hey, make sure you do this each month to avoid this fee, and just so that they really understand the product. Another thing, don't get caught off guard. Always look at your statements. I know a lot of people do their banking online and they're just super busy with life, but don't get 6 months down the road and then notice that you've been charged a $5 a month fee for not opting out of paper statements because you just didn't take the time to go online and click that button to opt out. I know a lot of us just either shred our statements or throw them in the trash when we get them because we do all of our bills online. So pay attention to that. I think banks get away with a lot of that hidden stuff because people aren't paying attention. I could go on and on about tips and tricks, but the best way to find out what will work for your banking needs overall is to schedule an appointment, sit down with a personal banker, and we can just make sure that you're set up the best way possible.
Right. Yeah, I think banks have to disclose fees to you, right? I mean, it's similar to me in my industry. We're disclosing how the money's moving, commissions, fees, all of that. So they're not trying to hide things. They shouldn't be hiding things from you. They really are telling you when you're signing up, but you're signing a stack of documents, right? So who's going to be reading all of that in front of the banker? So that's a great tip. Ask them, what are the fees? What's some way that I can avoid a fee? I had a similar situation, and it was if I had a checking and a savings and a credit card, I would have no fees across the board. But if I left out the savings, I would have fees on both, right? So they have these kind of promotional tricks, and just asking and being upfront and communicating, that's a fantastic tip.
Yeah, one final thing that I forgot to mention there. You can combine your accounts at many banks. I know we can do that here so that if you typically would have one fee on one account, because you have the other account, it avoids the fee on that one.
Mm-hmm. Right. Yeah. And so back to a little, you mentioned it a couple slides ago, but you said online banks might have a higher yield savings account than brick and mortar banks, which I do find to be true. And I talk to my clients about adding those options, especially for emergency funds. You don't necessarily want to see all the money you have in an emergency fund if you're supposed to be dedicated to not spend that, right? You don't want to be tempted. Let's just take away the temptation. And so you add the emergency savings account at a separate bank that has a higher interest rate, and maybe working and partnering with someone like Ryan who has certain products that are going to benefit you, and your, larger brick and mortar bank that might benefit you in other ways. It might be time to think through diversifying what your banking needs are and seeing really what the options that are presented. So thank you so much, Ryan, for your expertise. I'm going to keep some of the questions till the end. So hang on, and we're going to talk all about lovely Sasha here and transition to personal insurance. So Sasha is a personal insurance agent with Liberty Mutual. She's also a broker. So she's going to explain all about what that means and why that's really important. She also is bilingual, so she works with English and Spanish-speaking clients and provides extraordinary service to them. She has a really big team behind her to make sure all of their personal needs are taken care of, any claims or all of that. So thank you so much, Sasha, for coming and talking about personal insurance. And we're going to start off with this fantastically large list of all the things that you offer. So let us know more about the different offerings that you have personally.
Yeah, so thanks, Abby. And, it's a lot. It's a lot that we offer at Liberty Mutual. And I can't say that Liberty Mutual offers all this because how we mentioned earlier, I am a broker. So a lot of different carriers offer a lot of these different products that Liberty Mutual might not offer. And it's really nice. I think it's all about having everything diverse. I think Ryan touched on this earlier. When you have, if you're okay with having that, having all your policies in different carriers, because sometimes one carrier might not benefit you on your home or your auto together. But that's why it's so nice to have have a broker who's able to shop all your different insurance needs. So we do everything as far as auto, we can do classic cars, we can do any vehicles, old, new vehicles. I always give people this pointer for auto insurance by making sure that before you buy the car, check with your insurance agent and see if they can run you a quote, because there are so many people who buy a car, they buy a truck, they just buy whatever they're thinking of getting, but that's one payment that they're worrying about if you finance it. And then you also have to worry about your insurance. So I always say shop the insurance quote too before you buy it, so you know that you can commit to it. Something else that we do is umbrella insurance. And I'll touch more on this, but umbrella insurance is definitely something that I recommend for a lot of business owners. It's basically to cover you in any type of lawsuit, and it's covering your assets. Again, we're going to go over that a little bit more because I think this is something super important for people to know how it works, what is it, and just seeing if that's an option that they might need to have now or something down the road. We also do motorcycle insurance. We do ATVs. We do golf carts, jet skis, boats, home insurance, condo insurance, renters insurance. We also do investment properties and long-term rentals. So this is really awesome because if you decide that you want to start owning different properties, you want to look at having certain insurance for that, because home insurance and an investment property are completely different. There's different coverages that go into play with that. And then also mobile home and manufactured homes. We do flood insurance, personal articles, and pet insurance. So it's a lot of different products that we offer. So I think it's super awesome to be able to offer clients all like a full range of everything. Personal articles is one thing that a lot of people get confused on how that works. And it's really just any of your personal items. So if you think of your valuables, your wedding ring, if you think of bicycles, if you have any type of collections, fine arts, rugs, those are things that we can insure. And we have 2 different carriers that are able to insure that. So definitely something to explore on a little bit more.
So this is a lot of different individual insurance, right? You can pick and choose which one you want. But if there's one word that you hear the most in insurance commercials, it's bundling. So what the heck is bundling? Why do I want it? Why don't I want it? Tell me.
Well, bundling, I think everyone should want this because it's a discount you're going to get just for bundling auto, home. Sometimes there's other discounts you get. So if you start accumulating all your insurance needs at one insurance carrier, then you are going to get more discounts. So I think it's definitely worth exploring, because if you have your home in one place and your auto in a different place, then you're losing on a lot of on a lot of discounts. So one thing that I would say that it's really nice about Liberty Mutual is that we give you discounts even if, let's say, you have your home with Liberty Mutual and then your auto, I find it with another carrier that we use. Well, we're still going to give you a discount. And I think that's the beauty of bundling it with a broker, because they can do that. Now, every broker, every insurance carrier is different. So definitely you want to explore that, but always, always, always ask about bundling.
Great, good tip. So bundling, umbrella, what's the difference? Again, why do I want all these different things in my insurance?
So umbrella policies are pretty, everyone doesn't, this one's a really weird topic because a lot of people don't know how it works. People who even get it don't even know how it works sometimes. And the best way for me to explain umbrella insurance is, think of it as excess coverage. So if your auto or your home insurance, their liability limits aren't enough, you have that umbrella policy to back you up. So it's to prevent any type of lawsuits that you become responsible for. Now, if that still didn't make sense to you, I thought of a really good analogy of how to bring it up and how to explain it. So think of an umbrella policy as a 5-gallon can of gas that you keep in your trunk of your car in case your car runs out of gas. And I think that's just something to think of, because you want it, it's something where you might not use it, but when you do need it, it's there and it's going to get you covered and cover your assets. And the nice thing about umbrella policies is that they can have excess coverage from 1 million, 2 million, all the way up to 5 million is the highest I've ever seen. So it's definitely going to get you the coverage you need. Sometimes you want to have it if you have kids, if you're someone who has kids, you have a business, there's a lot of different factors. So that's why you want to explain your whole background to your insurance agent to make sure that they're getting you the best coverage. And price wise, a lot of people think that this might be really expensive. In my personal opinion, from what I've seen for umbrella policies, you shouldn't spend any more than $500 a year on this. So I've seen them as low as $150 a year to at least $500. Anything more than that, I personally think you're spending too much. But everyone teaches their own. If you are spending more, maybe because you do like that agent or carrier, that's great. But I think you definitely could get it cheaper if you shop it around.
Yeah, I'm really glad you brought up umbrella in your presentation today, because I think some small business owners have preconceived notions that, like in week 1, when we were talking about creating a business, well, I created an LLC and that's going to cover me for liability. Or I own real estate investments inside of a trust and that's going to cover me for liability. And I think they don't understand that all of these things play a different role, right? So there are certain things that we're protecting in a legal standpoint, and we are legally liable for certain things. And then there's actually the nuts and bolts of someone got hurt at my shop, or some accident happened, or some misunderstanding happened, right? And we need to make sure that we can actually have the funds to pay for that. And we're using an insurance company to do that, as well as legally protecting us and our family. And these two things kind of work hand in hand. And so it's hard to understand, like, as a business owner, where some of our vulnerabilities might be. And so using, you as well as an attorney to see those kind of aspects are going to be really important. So from a personal standpoint, if you have a business, if you have real estate investments, if you have renters, an umbrella is really something, you should be talking to an insurance agent, preferably Sasha, because she's so fantastic about how to add that to your repertoire. So okay, so I think it's always a concern when you talk about insurance companies, as some have had bad raps in the past, right? Like, what is a reliable insurance company? I've been in a wreck where it was really hard to get any money to fix my car. So I want to make sure that when I really need the insurance, that's the whole purpose, is that I can pick up the phone and get the coverage that I feel like I've paid for. So what's your perspective on reliability from that standpoint?
So I think when you want to find a carrier that's reliable, I think it's somewhat of an interview when you do find an insurance carrier, because you want to ask them, hey, if I get a claim or if I have questions, who am I reaching out to? believe it or not, whenever I help clients, a lot of them don't even ask me those questions, but I tell them, hey, if I can't answer, I have a team specifically for our claims, for our billing, and also one for our customer service. Just knowing that, I feel like that really puts people at ease, because knowing that they, if they can't call me, they can call someone else. So they have just a team, a support team that is going to be able to help them whenever they have questions or have something that, really urgent that comes up. So I think it's really important to make sure that whoever you're going to be with, whatever carrier, whatever agent, is going to make sure they have your back. Now, there's a term that gets thrown out there a lot about preferred carriers, which I believe we're going to touch on that a little bit later, but making sure that you're with a preferred carrier is something that I would consider. It's not always the case. Sometimes, sometimes you can find a very great carrier that meets all your needs. It just really depends, what they're offering to you. So some people need their handheld a little bit more than others. So if you're someone that wants to have an agent that's going to answer, maybe be with a carrier that does offer live agents that can talk to you, someone that you can come sit down with. I think that's one benefit that I offer a lot, is that, I can offer people who are very young, who are very tech savvy, and then I can help out people who are a little bit older, maybe people who can't really navigate through their computer or through their mobile app. So I think it's really beneficial when you are with someone who can offer a full range of services. But reliable definitely is someone that is going to make sure they're paying out your claims. I think that's the biggest thing, because Abby, you are right. There are times where, when you need to file a claim, your carrier, it seems like they just disappear, they ghost out on you, and you are in a spot where you don't know what to do. So I think there are a lot of carriers, I will not name the carriers I know that do this, but there are a lot that do that on purpose, because the whole point of an insurance carrier is that they are trying to make sure that they're not paying out on claims, because that's money that they lose out on. So making sure that you have the right coverage, making sure that you're with a carrier that's going to respond to you is very super important. So you can also find reviews on a lot of different websites. I would say definitely do your research, and also just take everything with a grain of salt, because just like anything, there's a lot of misinformation out there. There's going to be bad and good reviews about every carrier. So that's why you should do your part. Make sure that you're interviewing that agent or carrier to make sure that they're the best fit for you.
Yeah, really great answer. And I do want to plug in, while we're talking about people who might have been injured in an accident, week 1, our friend Izzy Etnikoff can help you with some of those problems as well, getting the money out of the companies that you need to really pay for your injury. So we have connection there for you as well. I also think from the insurance perspective, with reliability, working with someone who's a broker and can help navigate, there's so many options, right? Like when you're staring at commercials, I was watching TV last night and I'm like, here's a State Farm commercial, here's an Allstate commercial, here's a Nationwide commercial, and they're all like funny, cute. Oh, Geico, right? They're all like funny and cute and clever and whatever. But as someone who's not an expert in personal insurance like you are, Sasha, it can be hard from the outside. Like, what really is the benefit? Is the benefit of being with State Farm that I can talk to Jake in the middle of the night? Like, do I really need to talk to Jake in the middle of the night? Right. So, I mean, what's really the benefit of having a broker? And I mean, what does that term even mean? And then, why would I choose that?
Yep. So a broker is going to be able to do all the shopping for you. Now, I'm not going to say that they have every insurance carrier in the world to shop around, but most brokers have at least anywhere from 5 to maybe 30 carriers that they can shop your insurance for. Now, shopping insurance, I mean, most of us have one on the internet. We type in, all right, what's the best, cheapest insurance? I know I've done that before I even got into insurance. And I think it's very common for us just to pick the most cheapest. Well, a broker definitely has your interest. They are learning more about you. They are finding out, what is the type of coverage you have right now. And sometimes they're even going to, recommend, hey, you should have this coverage because of so-and-so, because they're finding out more about you and they're recommending what they think is best for you. So that's something that you don't get just by shopping insurance on your own, because I agree, there's a lot of websites where you can do the shopping and they basically, you put all your information in and it pulls out all the different carriers that, are going to be the best fit for you or that are going to give you the best price. But what the missing part is to all that is that you're figuring out on your own what kind of coverage you need. A lot of times you don't really know, and that's where the broker part goes into there. So you're talking to somebody, they're able to shop that insurance. And I think the other benefit to that is, let's say when your renewal comes up every 6 to 12 months, well, if you get an increase in your renewal or in your premium, then you can always reach out to your agent, and that broker is going to be able to shop your insurance again. So it's really nice to have that middleman to make sure that they're checking out all the carriers for you. A lot of brokers are usually getting new carriers too. There's a lot of new discounts coming on, so like they can navigate through that and tell you. And one thing that I think is very valuable too is that, for me, I know the ins and outs. I know what kind of discounts I can give you. I know, little tips and tricks here and there. And that's something that nobody who is outside of the insurance world is going to know. So that's another benefit of just being with someone who knows the back scene and the back end of everything too.
Absolutely. I mean, I'm a life insurance broker, and it takes hours every month, every week to keep track of all the different offerings, how they're changing. And so really having someone on your side that can navigate you through even the fancy language the insurance company uses that normal people don't use. I mean, that's so important. So, all right. I know before we move on, I know you have a story of someone that was not with a reliable carrier. Again, we're not going to say who that was. If you want to know, feel free to ask. But how would their experience, what happened to them, and like how would their experience have been different if they would have used somebody else?
Yeah, so this is actually a really good friend of mine. He had his insurance with this carrier, and he asked me to shop his insurance, and we shopped it around, and I wasn't able to beat the rate he had. He had a really awesome price, and he didn't have his declaration pages with him. I think he had just a cutoff of the price and some of the coverages. But as an agent, it's really hard to know everything that's covered, because only the customer knows that, the client knows that, because you get emailed all that information, or at least you should be told by your agent. And so this individual, they continued to stay with the carrier because we weren't able to beat the rate. And come a few months after, and they had a huge issue. They had a bunch of stuff happening to their home. Come to find out that the insurance carrier was not going to cover them because of the cause was not covered under their insurance. Now, it's really hard to say, because a lot of us, we don't know when we're going to be in a situation where we need something. So, it's one of those things where maybe he would have never known until it actually happened. But, sometimes when you're with a carrier, especially if it's a good carrier, they're going to make sure they're looking out for you, especially if they know that you're going through a hard situation. Well, in my friend's case, he didn't have coverage for something called loss of use, which basically is going to cover you to go stay at a hotel, and you're going to get reimbursed any fees that you spend, any additional living costs. And so he did not get any coverage. He didn't get any help. And with all that, he also had to go through all that hassle with the carrier, fighting back and forth. He had to hire an attorney. So all these extra expenses, all this extra stress was all put on his shoulders because he didn't want to pay a little bit more. Now, I don't blame him. No one wants to pay more. We all want to cut costs. But one thing that I feel like we shouldn't cut cost on is insurance, because insurance is there when you need it. And when you really need it, you definitely will be grateful for it. So that was his story. I think he definitely learned. And now, fast forward, he's actually going to be moving his insurance with us, because he sees the value of being with a carrier that is going to offer better service, someone that's more reliable. And also, after a few months, we were able actually to get him a lower price. And so, it just works out like that. When you are a broker, you're able to, maybe 1 month I'm not able to beat your rate, but maybe 2 months later I can. So, it's always changing. And then that's the value of making sure you're with a reliable company.
Yeah, and unfortunately, he had to learn the hard way. It was very devastating. But that's why, knowing the different options, knowing how your carrier can respond, the insurance company, what's their typical response, those are really some things a good quality broker is going to know. All right, so we got to talk about price, right? Because we know where we're getting the value and that there are different values from different tiers of insurance companies. But how really do you make the decision at the end of the day? So let's start off with how often should someone shop and look at different rates?
I say you should shop whenever you get an increase. An increase is normally 6 months to 12 months. So, I feel like you should be shopping whenever you see a huge increase. Now, a lot of people will even shop around when they have like a payment that goes up even like $5 more a month. So I feel like sometimes, you have to understand that as insurance is constantly always changing, because if there's more accidents happening, insurance is going to go up. That's just how it works. A lot of us forget that, and a lot of us think that our insurance should never be increasing, but it actually is very normal for it to go up a few dollars. Now, if your payment goes up about $30 more a month, more than that, definitely shop your insurance, shop it around. Even if it does go up a few dollars, it doesn't hurt to shop it around. I think that's the nice part of having so many different carriers around, is just making sure that you can get the best price. And also with that, there's a lot of changes that happen. I mean, I'm not the same person I was last year. I'm not the same person I was 6 months ago, not even a month ago. You're constantly changing as a person. Your needs are changing. So I feel like you should always be shopping, even when you have a huge change happening in your life, such as having a kid, getting a new car. So, 6 months to a year is usually typical, but I would say anytime you have a change, definitely reach out to your agent or your carrier and make sure that whatever you have that's new is covered.
Yeah, that's a great suggestion. I think it's hard for people to conceptualize how these increases are happening. Is it, well, I signed up for this company and 6 months later they're already increasing my rate, right? And there's not a lot of explanation in why or how they're making those decisions. But the reality is that insurance companies, there are humans called actuaries that are doing calculations almost on a daily basis to see if the risk and return and reward, I mean, if all of those things are in balance, right? And so they're constantly making those determinations by your age and your gender and what area you live in, what zip code you're in, how many kids you have, if you've been in different car accidents before, if you've ever had claims, are there claims in the neighborhood. They're making so many decisions based on all these different variables. And so you really can't pinpoint at any exact moment what really fluctuated. But I think an agent, like yourself, who understands all those things that are happening in the back, and your clients can call and say, is this something I should be concerned about? Should I be shopping around? And, someone like Sasha, who has access to lots of different insurance companies, can really give a more straightforward, trustworthy answer, because she can look at different options for you and make sure you're still getting the coverage that you need. So I think that part for sure is confusing. Why all these different numbers are thrown at me. I don't know how they're calculated. I don't know what determines the changes. So there really is a human, lots of humans who have this job that are making all those decisions. And all the variables can change. It happens with health insurance, life insurance. It happens all across the board with insurance companies.
Mm-hmm. And I'll touch on that too, Abby, because one common question I get very often is that, well, I pay insurance. Why, like when I get a claim paid out, why do I have to pay more after? Well, think about it. The insurance company is paying a huge claim. Like most people are paying $500 to $1,000 for a deductible, and a claim can be sometimes, over $5,000. So the insurance company is paying out a lot on a accident or any type of claim that happened in the home, or an auto insurance claim. And so, you think about that, that's why they adjust your payment for the next year to make sure that, whatever they paid out, they're making sure that, they put that back into your payment. So a lot of people think that, oh, insurance companies are, they're ripping us off, they're criminals. Like I get that comment all the time. And you have to think about, insurance isn't, and you don't use it, you only use it when you need it, because there's a lot of individuals who will use it constantly for every little thing, even when it doesn't even make sense. And I think that's something that you need to be very aware about, is that you should only use it when you really need it. There's some instances where maybe you could pay out of pocket and it's actually going to be cheaper. So that's also another benefit with being with someone who can discuss those things with you, because they'll tell you, hey, maybe you shouldn't file a claim. I would reconsider it. And a lot of claims, like so if you get your insurance just through the internet or through a carrier and you don't have an agent to talk to before you file claim departments, they are just trained to make sure they take the claim and they file it, and that's it. They're not gonna give you the, well, you know what, I would reconsider it because then your rate's gonna, no, they don't do that at all. So like that's something you want to make sure that you have someone you can trust and someone who's going to give you their honest opinion.
Right. I'm really glad that you brought that up. I think that's a great way to kind of tie this in a nice little bow is because when you understand a little bit more about each of these places, each of these industries and how they function, you can really become a smart buyer, a smart investor, a smart customer, a smart client. Because when you understand that insurance, just like you're saying, the whole point of insurance is to be there. Really, it started off as catastrophic coverage, right? When there are these really large expenses that could take every ounce of savings. I'd have to sell my house to be able to afford. I mean, that's a really extreme example, right? But that's how insurance started. That was the purpose, is so that you wouldn't have to upend your life when these really large expenses happen. And I think there's been a mindset shift of, I just, when I need my insurance, I need my insurance, and they should be there to pay whenever I want to pay. But you don't realize some of the consequences of that is now you're in their system as someone who overly uses it more than once a year, twice a year. You're maybe not a great driver, right? There's all these stereotypes. And I'm sorry, but that is how the industry works, because that's how actuaries are calculating how they can afford to pay everybody. So to link it back to how we started, right? We are trying to reduce fixed expenses and be smart about our money. And so one of the things about, making sure you have enough in emergency savings, like we talked last week, my suggestion, if you want to be fully conservative, is 9 months of expenses on the personal side and 9 months of expenses on the business side. If you have that amount of money, you're not going to be overly using your insurance company, and you're going to be able to make a smart decision as to when to use that benefit. You should use the benefit of the insurance company when you really need it, when something's going to upend your life. But when you have, a high yield savings account at a great bank and your money is sitting there accumulating interest and waiting for you to use it, I feel much more comfortable to use my insurance when I really should, instead of, for a $400 payment. If it's $400, you should be paying that out of pocket, right? And so many people in our society don't have that amount of money. So this is how it all wraps up together. You did the intro really nicely for me, so thank you. We are really just out of time. We went right to the end, and I'm so glad we started on time because you guys had so much information to share. Couldn't be any nicer people that are on this interview. These experts that really know their field. So I want you to make sure that you have their contact information. These are their email addresses. It'll be in the follow-up email as well. I'll give you their phone number, of course, because if you have any questions about either of these two industries or how it could benefit you more, you're nervous about your coverage, you want to reduce fees, these are the people that I'm going to call. These are the people that I encourage you to call. And next week, we are going to be covering business liability. So Izzy's going to come back. Our attorney is going to come back and talk to us about business liability, as well as Jim Garman, who's a State Farm agent and works with commercial insurance. And we're going to talk more about what areas of your business. This was more on the personal insurance. We're going to talk about business insurance and really how to make sure that you're not vulnerable and you can just keep sailing and making some profits in your business. So excited that you're here today.